What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So these past couple of weeks have been pretty crazy. I had warned about the volatility we would be experiencing as a result of the inflation data, and a 0.75 percentage point I was expecting the Fed would need to raise by to fight inflation. We of course got a 0.75% increase earlier this week, and the Dow Jones as a result put in a new lower low. I'd love to tell you that things are going to turn around, but the odds are now overwhelmingly pointing to us going lower before pushing higher. So today I want to talk about why the market actually tanked this week, why I think the market overall is going even lower near term, and ultimately how this all relates back to my strategy with ChargePoint. As always, this isn't to be taken as financial advice. I'm not a financial advisor. This is my personal approach to investing and the thought process behind it. I'd recommend watching all the way through so that you don't miss out on any pertinent information I'll be sharing. Drop this video a like if you haven't already, and hit that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. Well then, let me start by saying that my long-term view on ChargePoint has not changed, and I still believe that the lows for ChargePoint specifically are in, okay? Now, with that said, we did get some new information this week that, in my opinion, is critical and needs to be included on how I approach the market near term. So why did the market sell off? If, like me, you tuned into the press conference and listened to Jay Powell this week, his speech was virtually a repeat of his Jackson Hole meeting speech, where he laid down the hammer and said, in no uncertain terms, we will not stop until the job is done in regards to inflation. The 0.75% rate increase we got was widely expected, and a terminal rate of 4.6% on the Fed funds rate by end of 2023 was also expected. The terminal rate refers to how high the Fed expects they'll have to raise interest rates in order to get the inflation genie back into the bottle. For reference, with this latest increase, the Fed funds rate is now in the range of 3 to 3.25%. For context, it hasn't been this high since 2008, so this is significant, okay? Now, expectations are to close 2022 at 4.4%. Again, all that was expected. Here's what took the market by surprise. What you're looking at here is the dot plot graph. Each dot represents a central bank president vote for their projections on where they believe the Fed funds rate has to go in order to bring inflation back under control. The x-axis has the years and the y-axis has the actual percentage for the Fed funds rate. The problem is this group of central bankers here in the 4.75% to 5% range. What this is telling you is that a third of the participants now expect that the Fed funds rate may have to go beyond the previously published terminal rate of 4.6%. That is a new variable, and it brings validity to the higher rates for a longer scenario, which isn't supportive of risk assets like growth stocks or crypto. That unexpected news is why the sell-off intensified and dropped the Dow Jones to a new record low this year. But I don't think it will stop with just the Dow Jones. So why do I think we're going lower? Well, it's pretty simple actually. It's all about the FUD that has now taken a hold of most investors ahead of earnings. That's fear, uncertainty, and doubt. The list of companies announcing upcoming layoffs and or hiring freeze is growing. This week, Meta and Google joined this ever-growing list. FedEx came out last week and cut its yearly forecast by $500 million. That's big. Now, the concern here is that this coming earnings season in October is when most companies, including big tech, will take a serious blow to their profit margins. And if that happens, then analyst revisions will finally have to happen in a major way, which then drives another re-rating of multiples for stock prices lower. Now, when you consider that we're already near the June lows at the indices level, so that's the NASDAQ and the SP 500, market bears should be able to take over here and drive the overall market even lower. There is absolutely no macro catalyst near term that would help turn investor sentiment around, so going lower, in my mind, is almost inevitable over the next few weeks. Now, that doesn't mean that we go down in a straight line crashing to a new bottom, but how low we go will depend on what we see for the next CPI number, plus how most company earnings look. And so the big question is, what does this all mean for ChargePoint? In my last ChargePoint video, I called out the fact that the stock was in an uptrend, and if that continued, we would achieve a golden cross. Golden cross are typically a bullish signal as it requires the 50-day moving average to cross over the 200-day moving average price. An easier way to think about it is, what does the price action over the past 3 months looks like compared to the 1-year average price action? And well, as you can see here on the screen, we did get our golden cross here on September 16th. For reference, the blue line is the 200-day moving average, the pinkish line is the 50-day moving average, and the red jagged line is the daily price action. This last giant spike that you're seeing here on the screen came on the back of the earnings calls on September 2nd, with additional momentum courtesy of the $900 million EV grant for EV chargers across 35 states announced on September 15th by President Biden. That was a major boost to the ChargePoint stock. But even with all that, it's not enough to go against the full market momentum, which is to the downside, as I said earlier. You can see that the move up peaked here on September 15th, and after that, broad market dynamics took over and drove the price below the 50-day. Now, despite this near-term move lower, here's what I want you to actually see and pay attention to. From the May bottom, the uptrend is still intact. I view this near-term price weakness as a great re-entry point. I've been personally focused on buying crypto and Virgin Galactic while waiting for this opportunity. In this bear market, I target my buy points at or below the 50-day moving average. Because in the end, even though I expect more downside for ChargePoint as a result of the broader market going farther into bear market territory, I don't expect ChargePoint itself to put in a new lower low. That said, it's not impossible, but regardless of how low we go, it doesn't change the fact that ChargePoint is executing near flawlessly, growing their revenue exponentially quarter over quarter and year over year. It doesn't change the fact that the consensus analyst rating, because of the demonstrated execution, is a strong buy, with a $24.36 average price target, which is good for a 65% or so upside from current levels. Now, the bottom line here is this. This broad market sell-off is welcomed and frankly provides me with an opportunity to build my ChargePoint position at a more reasonable valuation. As I said before, there is absolutely no reason for me, at least, to rush with the current market conditions, right? I'm estimating that I have a good 3 to maybe 6 months left to accumulate what I want at the more reasonable price that I want without having to worry about FOMO kicking in. The last thing I will say is this. No one, including myself, Jay Powell, or anybody else that you watch on YouTube or in the financial news, actually knows how high the Fed will actually be able to hike interest rates before something in the economy breaks. And if that happens, the Fed will be forced to pause and or pivot back to an easing environment to stimulate the economy. And if that happens, the stock market will move up with a vengeance. So even though I believe that there is plenty of time left to accumulate, I'm also not sitting here trying to time the absolute bottom. Hence why I consider any price below the 50-day moving average good enough, assuming I have the funds to buy. But with that, that's where I will leave it for today. I know we haven't talked about Tesla in a while, so it's worth mentioning that they have their AI Day scheduled for September 30th. Rumor has it that their robot Optimus will be showcased, which sounds super cool to me. So I will likely focus on that next week. But for now, don't forget to drop this video a like if it helped you gain a new perspective and share with others who you think could also benefit from it. For my newcomers, subscribe and don't forget to ring the notification bell so that you too can stay in the know. I'll be back on Sunday for my weekly video. Till then, you can keep up with me here on Twitter for crypto-related news. Thank you for watching, stay humble, hustle hard, and I'll see you in the next one.